Welcome to the Monday Market Update. It is August 18th. And Nikki, welcome back.
Yes, thank you. Thank you. It's been quite the road trip. So we
Love
took a
it.
2.5 week long road trip up and down the coast of California and into some national parks and stuff. So it was very adventurous. It was awesome. So yeah.
Good.
Well, I wanted to just say hello again to everyone. I'm back in the office and, excited to be live again on the Monday update. From an interest rate standpoint, we are seeing things kind of hold steady right now into that mid 6.5 to 6.625% range from a 30-year fixed conventional mortgage, which has been really nice because we haven't experienced a ton of volatility and the bond market seems to be holding and waiting for the highly anticipated Fed meeting in September. So right now, like I said last week, everyone is kind of just waiting and seeing from a Fed meeting standpoint to see when and if the Fed is going to cut that interest rate in September. There's a high probability that they will. Most of the people who are voting members of the Fed have basically said, yeah, we're ready for a cut, and it's probably been too long. And so the feeling is that Powell has kind of waited too long for economic factors to play into wanting to drop this interest rate. And if you remember back, if you've been watching these updates for a while, 3, 4 months ago, I was talking about the economic factors that Powell wanted to see happen before he would be willing to drop the interest rate. And what has been happening since, probably 5 months ago up until now is that, the economy's met these factors. They've met these, determinations from a Powell standpoint, and for whatever reason, he'll keep adding on another factor, not wanting to drop these interest rates. So the feeling out there is that they are way too late on dropping these interest rates. So now they're going to have to be super aggressive starting in September through the end of the year with these rate drops. The idea being that, when the Fed drops an interest rate by 1/4%, they have to drop it by minimally that amount. If they do drop it by 1/4%, usually it's for certain reasons. But when they start to have to drop it 0.5% at a time, it gives the indication that they're behind the eight ball. And so we do expect to have at least a quarter drop in September, if not a half. And if we don't see that half in September, then we're going to have to see a half to 3/4 throughout the end of the year in order for them to do the catch up that the economists want to see and that that everybody is talking about where they feel that rate needs to be. There's no signs of recession from that standpoint, which is a good thing. And so it should work itself out. I know we've been talking about this for 24 months. When are these rate drops going to drop? When are these interest rates going to drop? And mind you, last year at this time, we were having this discussion of when are we going to get out of the sevens? Well, now we're solidly out of the sevens. And so we're hoping that by the end of the year, we'll be into the fives from an interest rate standpoint on the mortgage side. And I know I say this every time, reminder, Fed interest rate does not equal mortgage interest rate, but it does heavily influence what the bond market does. Therefore, generally speaking, when the Fed interest rate lowers, mortgage interest rates lower as well. So that's kind of the idea is to kind of just to do a wait and see approach to it. But from a purely mortgage standpoint, I want to talk a little bit about people who currently own homes and have late mortgage payments and how that affects their ability or doesn't affect their ability to purchase a home, their next move up home or their next home. So I had a client recently who, I've been talking to for quite some time. She had some late mortgage payments in 2024, but she has, since we've been talking, she has made on-time mortgage payments for the last 12 months. So one of the requirements when we talk about having late mortgage payments is how many times were you 30 days late, how many times were you 60 days late, and how many times were you beyond 60 days late. If you go, 90 to 120 days late on your mortgage, the mortgage companies most likely is going to start foreclosure proceedings. In other words, they're going to contact you. They're going to say, hey, we either need to modify your mortgage or we need to, start foreclosure proceedings. So if you do get behind that far. So when we think about on the other side, you qualifying for a mortgage loan, at any moment to move from one house to another, if you have 90 or 120-day lates on your mortgage, that part is going to be about how much time has passed since that happened. If you have 30 or 60-day lates, there's certain rules and regulations of how many you can have. Um, in order to qualify for the next home. So I'll give you an example. If in the last 12 months you've had zero mortgage late payments, that's a really good thing because what usually happens is your credit score is able to start recovering from from having those prior late mortgage payments. And so we're going to start to see credit scores in usually like the low 600s to 640 range. And then that gives you options. If you have one 30-day late in the last 12 months, you still have options to purchase a home. You still have options to get a mortgage. If you have one 60-day late in the last 12 months, you again have opportunity to still get a mortgage. It's when you have more than that or your credit score is not sufficient enough to get an automated approval through the automated underwriting systems, that's when we start to have to look at a longer time frame. So for example, let's say you have been making on-time mortgage payments and your credit score is a 640 and we run it through automated underwriting and everything is, it's approved. We don't have to look deeper into that mortgage or into that loan scenario or into your credit report to qualify you for another mortgage. If you've been going on and maybe you have one late payment in the last 12 months or one 60-day late payment in the last 12 months and we can't get an underwriter approval automatically because of your credit score and because of those mortgage rates, then we have to do what's called a manual downgrade to your file. In other words, we have to send it and the underwriter physically has to look at it to make a decision on a loan. So when that happens, that timeline of what we look at from a late mortgage payment extends from 12 months to 24 months. Does that make sense? So we have to look at the entire 24 months of your payment history, not just 12. And so it really becomes a opportunity for you to look with a lender to see if you can get that automated approval if you can, and then just keep doing what you're doing until you find the house. So needless to say, my whole point is just because you've had late mortgage payments in the past, and just because you might have had one or two late mortgage payments even in the past 12 months, that doesn't automatically disqualify you from getting a mortgage. There's just some things that we need to look at and some circumstances that could be surrounding why you had late mortgage payments in order to be able to approve the loan. So there is opportunity, like even let's just say you had a job loss. And therefore you went 3 months, 90 days late on your mortgage. That doesn't necessarily mean you can't qualify for another mortgage. That is what's called an extenuating circumstance, that something happened in your life that was not of your own doing. In other words, you didn't get fired from your job, but you got laid off, is an example. That is a financial burden that is beyond your control that prevented you from being able to make those on-time payments. So though there are certain instances, where we can, I don't want to say ignore the late payments, but justify the late payments in order to be able to make that loan approvable. So just FYI for you, if you do have some financial hardship or, it doesn't mean you can't ever move. It doesn't mean you have to, never get a mortgage again. It literally just means that we have to run with different options and work out a plan to get you approved into an approved state again.
Yeah. No, and I think that's timely because I don't know if you have the stats, but it's a real thing, and a lot of people are struggling. So I love that
Yes.
you bring that up today because there might be people feeling, you know, like, that they're stuck or that they can't do anything. So I love that you brought that up. Yeah.
Yeah, absolutely. You're not stuck. You can do it. And you are correct. There's a lot more people having financial hardship right now than we've ever seen. And so it's just good to know that if there is something that you need to do, you need to relocate, you need to move, you need to, your family's growing, whatever those circumstances are, that you feel like you need to, get into a different house, mortgage is still an option for you.
Yeah. Yep, absolutely. And I was just thinking something as you were talking, but I think that it goes along the lines of, when I would meet a lot of first time home buyers. And this was back when I first got into real estate, and we met with our buyers face to face before we ever worked with them and did an actual buyer consultation. And they just didn't know what they didn't know. I had more, I would say probably at least 60% of the first time home buyers that came and met with me. I get them over to lender, and they'd be in their house within 2 to 3 months. And their whole perspective or their perception of the process was like, oh, well, I just probably am like a year out or at least 9 months. I just have so much I have to do. And they just
Mhm.
didn't understand the process or how this works or what options you have as an amazing mortgage officer and lender that you are. I mean,
Yeah.
there's just so many different tools, resources, programs. And that's why I stay in my lane and I give them to you and you stay in your lane. I know enough to be dangerous, but I don't
Yes.
stay up. My CE is in real estate. Yours is in all these programs and tools and
Yeah.
resources. And it feels like, and you can speak to this or correct me if I'm wrong, but it feels like within your industry specifically, programs are coming out and we're watching what's happening and then they're responding, not necessarily kind of reacting, but responding to what's happening so that it can be more fluid and we can get more people the help and the resources and the programs they need to make this happen.
Exactly. And that's exactly what happens a lot of times is that we'll have, like, for example, we'll have an economic event like, lack of inventory, for example. And therefore, what happened when we had that lack of inventory, Fannie, the administration at the time under Biden, turned to Fannie and Freddie and said, how can we get more people qualified to purchase homes in the idea that if there's a bigger pool of buyers, then there's going to be a bigger pool of sellers, or if there's sellers that are out there that want to move up, how can we make it easier on them to do so? And that resulted in, different credit score requirements, different down payment requirements, and more flexible mortgage insurance and things of that nature that changed the rules that Fannie and Freddie, allowed in order to make it more available for homeowners, to be able to move around and to try to stimulate that housing market. Because if you really remember, I've said it before, the housing and shelter is the main component of the CPI and the Consumer Price Index. So when there isn't a lot moving around from a housing standpoint, that CPI number looks really bad. And so what can we do to get more people in homes? Well, right now, again, the push is what can we do to get more people in homes? And it's lower that interest rate. Because making it easier to qualify is all great, but that didn't work. So how do we get people into homes? We have to lower interest rates to stimulate people to want to move and to get that CPI number, looking healthy again.
Yes, perfect. All good. I
Yes.
love it. So glad to have you back live. I
Yes, me
appreciate
too.
the videos, but nothing
I
nothing
know
compares.
nothing's quite like the discussion, right?
Yeah, no, it's great. No, this is really, really good, really timely. I think that as agents, I going off of the call today, I I think it's just being human and checking back in with your buyers, over the last year or two, and just having a conversation. I mean, obviously, not like, are you having trouble paying your mortgage? But you know, you could. I mean, depending on your relationship, but just checking in and saying, how are things going? How are the home? And if you have that strong enough relationship and you built the rapport, you might find people that need to talk to Nikki right now, just to understand the full picture. Because so many times, especially when people are in crisis or have something happen that's they feel negative, affecting them negatively, like all of a sudden the blinders go on. You feel like you have no choice, no resources. You stick yourself almost in the mud, and it doesn't have to be that way. So yeah, that would be my thing today for the agents listening, or even if you are a homeowner and experiencing any type of hardship,
Yes.
reach out to Nikki for sure, or me, and we'll get you to someone that can at least give you peel the blinders back, give you a
Yes.
holistic 360 view, and start putting a roadmap together if that's what it is. Yeah,
Absolutely. And I can definitely help, if you want to stay in your home and you're still experiencing that financial hardship, there are resources for you as well. So I can help get you to those resources.
love it.
Yeah.
You're the best.
Awesome.
Well, good. Well, look up Nikki, look up myself. I'll drop below any the way to get a hold of us, in whether you're watching on YouTube or listening to the podcast. Subscribe, like, leave a comment. We read them all, and we would love to help in any way we can. So,
Absolutely.
all right. Till next week, go sell something, and we'll see you then.
All right. Bye-bye, guys.
Bye.